twos. We'll take another 15 minutes or so, and then we'll break off for a few minutes. I'll try to shy away from the OBBBBBA updates for the current year. New information keeps coming out. We keep learning things, so please allow me a little bit of grace if there are some bullets or some information on here that are potentially changing for the current or for upcoming years. So I'll try to shy away from that, but if any questions do relate to the OBBBBBA, we can certainly still field those. The basics for our W-2s, they're calendar year forms. We're issuing them to the people that we've paid, the employees, so not the vendors, but the employees that actually work for the entity for their wages they got during the calendar year. And then it reports different categories of taxable wages, taxes withheld, and other deductions that you would put on that form. Again, for that employee to then go file their taxes at the end of their year. The tip and trick here is just configure your payroll system to calculate all of these correctly and print onto the form. So at the end of the year, it should hopefully be print forms, process them. Obviously, there's usually some corrections or things that might need to change, but it takes that information you've processed for the prior 12 months, and it should already be going onto those forms correctly. It's a copy. This is the 2025 W-2. Again, some changes coming for 2026. This one takes up a half a page. So a little bit bigger than the 1099, but same sort of layout. It has the employer and the employee information, and then with all the boxes over there for the wages, the tips, and other codes that you might want to put on those forms. On the other boxes, so once we get past all of the sort of admin information, the names, the addresses, box number 10 is for dependent care. So benefits given under a dependent care program, you would list those amounts within box 10. 11 is for non-qualified compensation plans, deferred compensation plans. 13 has a few different things. 13 would be a statutory employee, so an independent contractor that is sometimes treated as an employee. So some unique employee setups there. Retirement plans, we put IMRF information within box 13 under that retirement plan. And then third-party sick pay payments you would report within box 13. And then 16 and 17 have these state taxes, wages and taxes listed there. Box 12 is the most fun because it has 30 different codes that you could put within box 12. The codes go from A all the way through II. So you can use A, B, C, D, E, F, G, H, but not I. It goes A through II. The 5 letters that you can't use are I, O, U, X, and CC. For whatever reason, and I didn't have time to look at why, I really want to figure out why they just skipped over those. I don't have any theories at the moment, but there's a lot of numbers and codes that you can put into these boxes. So the most common ones that we see are some of these. Again, for full instructions, there's forms out there directly from the IRS website that has all those 30 codes and what the descriptions are and what information you would put in there. But these are some of the common ones for group term life plans and effective deferrals on 401k and 457 plans, as well as non-taxable sick pay and Roth contributions on a few qualified plans. So a lot of information to digest, nothing we're really going to get into specifics on today, but a lot of codes for box 12. One of the other boxes, 14, that we'll touch on, charitable contributions, non-taxable income, some other information there. There's no standard list for box 14, so you can sort of use it how you see fit. So if you have any unique scenarios that maybe you want to put information on there to get in front of the employees before they come asking for it, you could utilize box 14 for that. On the preparation side, reconcile your 941s. So 941s, those quarterly tax forms you'll need to fill out and file with the IRS. It's easy to reconcile your W-2s against those throughout the year rather than waiting until the very end of the year to try to do that. Say you had a payroll issue in February, you would catch it in early April when you're doing those 941s to make sure it's hitting the 941 and the W-2 correctly, instead of waiting until January and saying, hey, that person that doesn't work here anymore had some weird payroll thing back in February that we need to go fix. No one's going to remember what you did or how you treated it at the time unless you have a really thorough documented plan. So it's easier to do that throughout the year. And then make sure your W-2s are getting generated for all employees who received payment throughout the year. So even if they don't work there anymore at the end of the calendar year, if they got paid during that calendar year, they would still need to get that form. This is an example, and the text is going to be small for the people at the back, but just a quick example of a tie-out report that we use. It's just built in Excel, and there's some formulas to help check all the variances. So across the top, we just have the 4 quarters, so quarter 1 through 4, and then our W-3 amounts. So then each quarter, we process our 941s. We drop in the totals under quarter 1 for all of the wages, and then all of the taxes, and then it verifies that against the W-3 that we printed in that same time frame. Again, that's just to make sure that your software is printing the correct information on both of those forms. So if it's only hitting one or the other, you can figure it out and reconcile it from there. So strong recommend to do this. It's relatively easy to build. It's just drop in some numbers and then plus sum equal, we have some Excel whizzes that throw these together and some templates that auto-populate for us. It's really fun. Can we do one more flowchart? Yeah?
Sure.
It's important to do this, and I have to give credit to Tim on this one. We had an internal payroll training, and we had a whiteboard up at the front of the room, and a light bulb went off in his eyes. You could see it. It's like, this isn't what I was going to talk about, but we got a whiteboard. So he chicken scratched some circles and some lines and some arrows going both ways and all over the place. So this is sort of a cleaned up version of that thought process. So you're the employer. You're going to issue to the IRS 941s. So you're doing that. And you'll notice here it's a little color-coded. So the green, any green arrow is the employer responsibility. So anywhere you see green, that's your responsibility. And then yellow is going to be our non-employee, or non-employer. So that might be the employee, that might be the IRS. We'll see. So employer giving your 941s to the IRS. The SSA, Social Security Administration, is over on this side, and they're going to get from the IRS the 941s. So now the IRS and the SSA both have those 941s that they've gotten throughout the year. The SSA is also going to get from us the W-2s at the end of the year. So now the SSA has the 941s and W-2s. If those don't match, they're going to have some questions for us, rightfully so. So that's why we want to make sure they match throughout the year, because if we just adjust the W-2s for something, if we didn't also adjust the 941s, there's some corrected forms we might need to file if it was an issue with both of them. And then we're missing one piece up here, the employee, the people getting paid. The employee will get from us W-2, the same W-2, should be the same W-2 we issued to the SSA, and then the employee is going to file their 1040 with the IRS, again at the end of the year. So then the IRS is looking at the 941s from us and the 1040 from the employee. If those don't match, they're going to have some questions. And then if they say we got to fix something, then we got to go fix that piece. The employee's got to fix the 1040. The IRS has got to send the corrected 941s to the SSA. The SSA has got to get corrected W-2s from us. We got to send a corrected W-2 to the employee. So make sure it's right before you issue any of those forms. With each of these steps, not necessarily all of them, with a lot of these steps, there's also the exchange of money. So this is just really looking at the information piece of it. There's also the exchange of money by way of payroll checks, direct deposits, deductions, taxes withheld, taxes paid. All of those pieces should also match all the information that we've filed. So that's really important. It's the whole network of all of these pieces, and if something ends up being wrong, there's a lot to fix and a lot of people to communicate with and correct. So just make sure it's right to begin with. If you do need to correct something, it happens. It happens a lot, and that's okay. But the Social Security Administration, they can reject forms for incomplete or inaccurate information. So if you have an unsuccessful filing, you may need to correct something right off the bat. There are W-2C and W-3C forms for those corrected versions. So that just has extra fields for here's what we originally processed, and now here's what we're saying it should be, so that the IRS doesn't have to go find what we originally said it was. So just a slightly different form there. And then here's the potential fee structure. If you're intentionally disregarding your filing, there's no limit on how much they could penalize you, but it's at least $660 per form. So please just file your W-2s. I have to trust that none of you you're here, so you're not intentionally ignoring filing any of these forms. But even within the first 30 days of the due date, it could be up to $60 per form that you could potentially get hit with a fine or a fee. So those due dates are important. Even if you do have to end up doing corrections, make sure you hit that first due date. If you need support, call them. Again, that would really just be for specifics on the filing. If there's any issues with actually submitting the forms or any notices that you've gotten from them, they would be the best resource for any of those. And then I'll leave up here, time for one or two questions, and then we'll do a quick break. But I'll leave up the common form due dates for both of these. So you'll see it's February 2nd for a lot of them. But then that miscellaneous form, if it has data in boxes 8 or 10, then it's the 16th, February 16th this year. So there's the recipient and then the e-filing deadline. So I'll leave that up there. Any quick W-2 questions? Yes?
This kind of goes back to the no tax.
Yeah.
Is that okay?
Yeah.
So if an employee, and I don't know, if an employee is able to work with their tax professional and report their qualified overtime, will that come back to a W-2 that needs to be corrected by the employer? Or do we even know if that's a possibility?
I'll look at Tim. So the OBBBBBBA question this time was?
Repeat the question. I was fiddling with the microphone.
So if an employee works with their tax professional and if they're able to report what they believe is their qualified overtime, which I'm not sure if that's even the case, would the employer then have to correct their W-2?
No. For 2025, no. If you're opting out of reporting anything on the W-2 or at all, the IRS will not issue a penalty, assuming that's the only thing you opted out of doing. If the employee is working with their tax provider and they come up with a figure to put on the tax return, you have no further responsibility with the W-2. Excellent question.
What if you opt in?
If you opt in, then I'd have to ask why they're recalculating it. If they disagree and they're like, we've done an independent calculation, but you put it on the W-2, then maybe to be safe, I would do a corrected W-2. If you are opting to calculate it and put it on the W-2, you are making a representation that you believe it's accurate. If the employee disagrees and proves out, you probably want to make sure you agree with them. And you're like, oh yeah, you're right, I missed that. Then I would correct the W-2.
Would that be a reason to do like a separate letter or form instead this year?
Probably. And it's probably easier to do that anyway, to do a separate form. Yeah.
On the W-2, I think it's box 13 has a checkbox for retirement plan.
Yes.
My question for that would be, we have employees who are not, IM or F eligible, but they contribute to a 457B. Would we be checking the box in that situation, do you know?
Nope.
No?
457 on its own does not qualify someone for the retirement box being checked.
Okay.
Excellent question.
So, just kind of to add on to his question, I have some people, we had a weird Section 218 agreement where some people aren't Social Security Medicare, and some people are. So they have mandatory contributions to the 457 that we match. Is that considered retirement, or does that still
Yeah, so the question is you have a Section 218 plan, some employees are not paying into Social Security. The employee's making 457 contributions and the employer is matching them. No, again, on its own, that does not qualify someone for having box 13 retirement plan checked, but you would still report those in box 12.
So that's not doing, but it's both the employee and the match that go into box one?
Yes.